What if inflation doesn't come down? What if prices remain elevated for years to come? That's the worry for so many people today. My name is David Quintieri, and what I do here at this channel is bring you the truth. I am not here to give you information that you've heard recycled over and over again. We are going to read between the lines and make it real simple. Today, we're going to talk about inflation all over the world and how it's affecting everyday people and their lives and what that means for the medium term and of course the long term. I want to show you some interesting data beginning with this. US food prices are still up 8.2% online, even as inflation cools. What we are being told is that, on one side, we've got the transportation, we've got the increased cost, input costs, like employees need to make more money and so on. At the same time, this is the online component, a little bit different than, what you would experience in the store and so on. But what are we getting? No question about this. I've seen it from you, and that is inflation is off the charts for goods and services. This happens to be just one aspect. So we can look at it as food, or we can look at it as prices of everything have been rising. But we have to acknowledge the elephant in the room, and that is the central bank policies as well as the policies from the government. What have they done to the money supply in order to make all of this possible? Do you see? If that money wasn't sloshing around the system, it's not going to eventually make it to some consumers' hands. Some consumers can benefit from all of that. Maybe they are the wealthier kind. Maybe they were getting checks from the government. Maybe the corporations decide, let me just see how far I can take it. I know that there are some services. I remember 2 years ago, somebody telling me they used to go to this place, they would get this service, 25 bucks. Then it was 30 bucks. Then it's $35. And essentially just trying to test the market, and the customers just kept coming in through the door. And so of course they're going to do that. They're trying to push to see how far. Now, maybe they can't get enough customers in because there's a recession, let's say. Well, what do? They go from 35, maybe they bring it to 30. How are we doing? We still doing good? Maybe I'll make a few extra phone calls. Hey, we got a special on today. It's only $30. Why don't you come on in? Try to get them to come back in and get that schedule happening again. This is what businesses are doing here. Are they going to bring those prices back down to where they were before? Not with all of this money completely devaluing the rest of that cash that's out there. New money comes in, it devalues the remainder. So you are there, you're working so hard. Then they print up trillions of dollars. All of that cash that you had saved, all of that cash that you tried to just put in your bank, safekeeping, maybe under the mattress, maybe this and that, it was burned. They burned a percentage of that without even putting their hands on it. Do you see that? You see how that works? It's incredible how it's done. Now, you had seen what the debt ceiling crisis and all that, I covered it here on the channel. I also talked about it in a video where the Treasury's cash balance, think of it like the checking account of the Treasury or the US government, well, that started depleting all the way down. And so they talk about this, and it all relates together. I'll explain it here in a second. They have one potential risk taking place today, and that is that the Treasury is set to issue more than $850 billion in new bills between now and September, which could create a potential for higher yields, which means that's higher borrowing costs, especially for banks that rely on short-term funding like commercial paper. All right. The problem is, if in fact we do see issues, we have been seeing tighter credit conditions, and then you lay this on top of that, then that could be of concern. We still don't know that yet. Okay, so the whole point here is, I'm trying to make, central banks had done all these activities. We now have brought interest rates up to a reasonable level on a global scale for the Fed specifically. They had seen interest rates rise to these levels, trying to bring inflation down. However, with the Treasury set to do this, it's going to complicate matters. And so how's the Fed going to react? Are they going to be able to start cutting rates like everyone expected? I'm not so sure about that. higher borrowing costs seem to be in the cards. If that's the case, we can expect more of a slowdown. So keep that in mind, okay? The Fed will keep rates high thanks to inflation fueled by corporate greed. That's according to investors. Surging profit margins that helped drive inflation will recede. So that's, some people do say that's the case. However, I would have to, take both sides of this. And to me, it has been seen that yes, corporations are squeezing their customers as much as possible. I'm feeling it all over the place. Everything that I was buying before is up. Those are services I use online. Those are services I use locally. All right. And that shouldn't be a surprise. I mean, we've seen that all along. Companies, whether they're small or big, are trying to make as much profit as they possibly can. That's clear. Okay. And we do have an issue, though. It's that, for instance, if you look at even McDonald's or something like this, if you see the prices that they have to pay for their employees, something that would be just, a stock boy who many, many years ago, they would only make a few bucks an hour, and even factored for inflation would be making not enough. That type of thing now, the minimum wage in a lot of areas might be $15 an hour. If you're in Canada, it might be even more. If you're in Switzerland, that's even way more than that. So as a business, you can only hire so many people. Okay, you can't operate at a loss. You're not Amazon. You're not getting money from venture capitalists throwing cash at you, and then you could just continue to pay employees a very high amount or hire many employees. That's just not the way it works. There has to be some profit at the end of the day, but it has to be balanced out. If you try to squeeze your customers too much, they'll go somewhere else. So what we see here right now is inflation in every single category. We've seen that from the central banks, from what the governments have been doing, trickle that down. Companies are, hey, why not? We got trillions and billions being thrown everywhere. Let's see what we can do. Let's see what we can manage at this point. We're getting less quality on the products. My God, some of these things that they try to sell people is disgusting. And then at the same time, they're squeezing the actual packages down, the shrinkflation. But then we're also getting, just higher prices. So we're just losing in all categories. During this time, though, the companies that do well for their customers, even if they didn't cut their prices, or maybe they did increase their prices, but they make the customers feel good. They give them the good customer service. They give them the great products. And they do that and basically try to make people feel good about their purchases instead of it being so transactional. I think those companies will continue to do well. There are few and far between, but I do think it's important. Very important. In my Amazon business, one of the things I do is it's an automated thing, but I give a very nice personal email to each one of these people, giving them, a bunch of things. I don't want to give too many details, but I basically do something that nobody, or 99.9% of the other sellers are doing, because I want to go that extra mile within the boundaries. There's only so many things you could do through Amazon, but that's what I'm trying to do, because I'm trying to make it a little bit more personal with what I'm allowed to do. And that's so many times I get the feedback from those customers saying, wow, I can't believe it. You reached out to me. I never had that happen. This is fantastic. Thank you so much. And then I reply back to them and say, you're welcome. Thank you for being a customer. You're supporting small businesses, and so on. Okay, so that's just a little personal anecdote, and I want to cover this here with my favorite, Janet Yellen. Janet Yellen headed to Paris summit in push for global debt and, of course, climate reforms. I'm not sure what the Treasury Secretary has anything to do with climate reforms, other than the fact that will cost people a lot more. Let me tell you that, okay? So you could see it, just seeing how they've expanded this, how they're going into there. They're just saying that they have to, they're talking a lot about the climate change and so on. However, there's a lot more expenditure that comes with this. And so what we can find often, like I've studied this time and time again, well over a decade now. Essentially, what's going to happen here is that they're going to try and get all of the economies of the world to spend money on certain things, which will benefit some companies. Now, those companies may not operate in every single country, but understand that if you're picking up on a trend, you are wise to pay attention to what happens at these summits. Because if they say, for instance, we are going to all commit to nuclear energy by 2030, getting, 5% of GDP spent on nuclear. Just let's just say, or solar panels or this and that. Okay? What does that mean? Okay, now we need resources. Okay, maybe that's uranium, maybe that's silver, maybe that's copper, whatever it is. You could see those individual commodities. Okay, bullish for that because all countries just signed up into that and the countries have unlimited spend. At the same time, we can look at it like, okay, there's going to be some companies that benefit from this. Who are the companies getting those contracts from this government? Do you see what I'm saying here? Big stuff, okay? I'm not just covering articles. There's so much more to this, and I want to bring you that. And now, this is a completely different change where we're reading between the lines on all this stuff, and I'm going to take that time to slow down and bring it to you if necessary, and I hope you do appreciate that. I've been getting a lot of positive comments recently, okay? Of course, they want, the macroeconomic stability, including addressing the debt challenges facing many emerging and developing economies. Let's be honest, none of that will ever be a concern for these countries that just print, okay? The Fed's battle against inflation could have economic consequences well beyond the US borders. That's according to the World Bank. The swift tightening of monetary policy will particularly impact emerging markets and developing economies. That's big, okay? The whole world watches when the Federal Reserve decides to do anything, and that, as of right now, as I record this, you may have already seen the Federal Reserve's meeting and what their actions are. Either way, we could see that interest rates are at a moderately high level, and so this impacts the whole world. If they're doing this, that means their dollar is strong. That's versus the other countries' currencies. If they start to cut interest rates, it reverses the other way around. So this really has, it's like rocking the boat for a lot of these countries, okay? So pay attention to that for any of these developing nations. This is just talking about the fact that this individual here, one of these, financial bigwigs, there are people who still believe that this is the end of the cycle right now with the Federal Reserve's decision. I don't think that we can say that yet because we have really sticky inflation. Very good stuff. And what she said specifically was, look at what the RBA and the BOC, the Royal Bank of Australia and the Bank of Canada, the central banks, recently did by increasing interest rates after saying, no, that was going to be it. So that's very important, that just because you pause once doesn't mean you can't go and increase again. That's what she's pointing to, and I would agree with that, so I would be careful to look at that. But then you look at the other side of the world, China cuts short-term policy rate as recovery weakens. 7-day reverse repo rate lowered by 10 basis points. Basically, all you gotta know is that they are trying to stimulate at this time when other central banks around the world are trying to tighten, or at least pause, tighten. They're somewhere in that range. But for China, no, we're going stimulus. And that's another. They continue to do this in different ways. This happens to be just one of those. Look at this. Interesting stats. Egypt's inflation accelerates anew to stay above 30%. You have Mexico to hold their key rate for as long as possible. They want to hold this, increasing interest rates as long as they possibly can to bring inflation down. Argentina's inflation is seen hitting 149% this year, over and over again. And so I asked the question, what are you going to do? You got to look at your finances in a very different way, under a very different light. I covered some of that in this video. Click this link and I'll see you there.